And welcome to another episode of Daily Market Mastery with me, Christian Rauchenwald, on this mediocre Wednesday. I hope you all had a great start into the new week. As always, before we jump into the markets, let's get the usual disclaimer out of the way first. Everything that I share in this live stream/video is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. Besides that, other than liking and subscribing and enabling notifications, I recommend that you check out the links in the description below, because there you can find all the tools that I'm using, so the broker, the charting software, and the strategy I'm following. And most importantly, as I point out in pretty much every episode, if you haven't done so, give the Elliott Wave principle a try, because you can read it online for free when you use the link in the description down below. Now with that, we can jump straight into it, and for a change where usually we have very often we have pretty break-even starts into the day with like plus minus $100. Today we're actually having a slightly positive start into the day. Those of you that have been following the markets will already be aware that GameStop has been moving up a little bit, and we've been holding 510 shares for now, I don't know, 2 months or so, or 2.5 months, because we got them assigned through $30 put options. Now, for this Friday, we still have $30 call options written against 500 of those shares, which means that if GameStop finishes the week above 30, those 500 or 500 out of those 510 shares disappear at $30 per share. If we stay below 30, we can just sell new call options. We will actually, once the market opens in 2.5 minutes, take a look at the possibility to already roll our option, which means we would take a $26 loss. I mean, today the price for the option will change once the market opens, so depending on the value and what kind of loss we would have on this week's Friday call options, and how much the premium would be for next week's $30 call options, we might decide to take that very small loss and basically buy ourselves another week, or pocket the premium for another week. Now, yeah, so I'm a little bit torn. We'll cover that in a minute about technically I want those shares to get called away. On the other hand, especially since I anyway hold shares at Computer Share as well, practically I believe there's more than $30 upside. So yeah, it's like going to be a tough choice. So, but we'll cover that in a second. Other than that, I mentioned in recent episodes that I will start to track a little bit, or try to track a little bit, the different predictions. So for individual stocks, now the ones that I'm showing right now are not accurate. There's pretty much mostly sample data. I'm trying to get my personal assistant to pretty much watch the recordings of the stream and update the sheet accordingly. It's like a work in progress. So which means today, I have another call in an hour or so scheduled, so I cannot do too much overtime, but I'll try to do things a little bit more detailed to make my assistant's life easier as well. So she has an easier time filling in the starting data here. And with that, I would say we jump into the charts and see. Oh, charts are not open yet, so I'm gonna have a sip of coffee while Motive Wave is firing up. There we go. No, we're not going to start with the Nasdaq. We're actually going to start with GameStop. Now, as I mentioned previously, the first thing in previous episodes we covered, the first thing we would need to break would be the 25.24 that we haven't done yet. But I mean, there is a chance that this turns into some 1, 2, 3, 4, 5, which would provide us with the break. Now, as I mentioned yesterday already, with this strong move up, the scenario that we actually finished our corrective pattern here and are now going further up is the more likely one. But until we break the 25.24, there is the short-term potential that we first go down to 15.30, 15.54. Now, for my assistant, so for her to update the sheet accordingly, the overall prediction, however, would be up. I don't have a fixed price target at the moment, because only once we have the confirmation where the correction ends will I try to determine that. But I would say it's above $30. So, I mean, I'm not going to say how above 30 or so, but definitely above $30. So that's just for my assistant, so she can enter that in the correct sheet based on the current price at $23.19, $16 or so. By the way, if we zoom in here, so just so that we spend a little bit of time here, we can see here that we have what is potentially here clearly 1, 2, 3, 4, 5, which means right now we are correcting this movement. But although 5 could be not finished, because here it looks like we might have only 1, 2, 3, 4, yeah. But assuming that 5 is finished as well, then we would be looking at this here and would expect to retrace here or here before we go further up. Now again, I said possible that 5 is not finished yet, so let's work our way just through that last wave pattern here. We can see if that's our wave 1, 2, then our wave 3 bounces at the 461.8 retracement. So usually we bounce at the 2618, but obviously there are exceptions to that. That's why we also have all the other, not retracements, extensions. That's why we also have all the other extension levels there. So we bounce here for a 1, 2, 3, yeah, 3 technically here, 4. And our wave 5 targets then look like this if we use an expansion. Question is going to be if this is our wave 3 or this is our wave 3. So there are corrective patterns where wave B makes a new high. It does not make a huge difference in the further forecasting here. But basically, we can see our minimum wave 5 target was at 23.58 that we already exceeded, and our maximum wave 5 target that we could also exceed, but usually we don't, would be 24.55. Now that would just be for this wave movement here, and depending on, again, if we already finished our wave pattern, then we would expect to go further down, like 22.59, 21.77. Potentially even 22.18, considering that very often a corrective wave retraces into the area of wave 4 of the previous impulse wave of a lower degree. Now, if we assume that this 5th wave is finished, then that would be the previous impulse wave, and the lower degree would be when we subdivide it into 1, 2, 3, 4, 5. So the area of wave 4 would be this one here, and therefore the 15% area would be the most likely candidate for a correction here to finish. Roughly plus minus a little bit before we continue with the next wave. That's, however, only the case right now if the 5th wave finished here. Yeah, when do we know if the 5th wave finished here? Well, obviously, we would know that it finished if we break through whatever point we had here, for example, to the bottom, so 22.48. Yeah, it's not much of a help because we already have one retracement level here further. However, it also doesn't change the long-term outlook because this is visually clearly a 5-wave impulse, which means it should be followed by a corrective pattern, which could have 3 waves or multiples of 3 waves if it's a combination of different corrective patterns, and should then be followed by another 5-wave impulse pattern upwards. So, yeah, but based on the look of that last part here, I believe it's possible that the 5th wave hasn't finished yet. Now, if the 5th wave hasn't finished yet, then we can also assume, here it's a little harder to determine where wave 1, 2 is, but let's assume it like this. So if that would be the case, then we would actually get a nice overlap, quite impressive to be honest. So from the look here, if we assume that this here, from this 5th wave that we assume now is unfinished, this here would be 1, 2, 3, 4, and wave 5 still to come. Then we would assume we can see the minimum target at 23.95 for that 5th wave, which we already reached here, or the maximum target, which overlaps plus minus 1 cent with the maximum target that we have from the bigger forecast. Yeah. So yeah, like, I mean, that might just be coincidence, or it might be confirmation that indeed there is now still a push to come. And again, this push usually wouldn't exceed that level, but it definitely can. So it's not that it's impossible for it to exceed that level. And if that, I see some of the levels were covered so by the camera, but basically depending on that, it would change the retracement areas that we would expect for the next corrective pattern. Yeah, so the tricky part here is, in terms of labeling, at least for me, is, well, it's relatively easy to see here 1, 2, 3, 4, 5, and even the overlapping averages tell us here the story of 1, 2, 3, 4, 5, or again 5 potentially not finished. But if we look at the overlapping averages here, I would guess, I would actually say 5 is finished already. In which case we reached the minimum target for that 5th wave and are now looking at A, B, C downwards pattern that might just be partially developed or might already be half developed. Either way, we would then expect, did we make a new high here? Just double checking for 24. Okay, so tricky. Could be that wave 5 finished here. As we saw earlier, we already reached the minimum target. If that would be 1, 2, 3, 4, and then 5 here would be the minimum target. So that's possible. So either way, just looking at this, the expectation would be that while there is the chance to go a little bit higher here, I think we're already in the corrective pattern that will bring us down into this area. Most likely candidate would be the 50% retracement in my opinion, so anywhere between 22.18, 22.59, and then we would get the next 5 waves up. Now, while that pattern here looks quite clear, obviously the challenge is when we zoom out to understand the overall pattern and the bigger movements, which is hard because for that we would need to be relatively certain where the corrective pattern finished. And even if we would decide that it finishes here, so that the corrective pattern finished here, we would need to somehow be able to label this entire mess. And that's actually quite tricky, at least for me. So from the looks of it, if we zoom in a little bit, you can see, well, this here could be something like 1, 2, 3, 4, 5 as some weird diagonal where this part here is clear 5 waves, this part here is clear 5 waves, but this entire first part here is a pain in the ass to label. Then the challenge would be, how the heck is this a 3-wave corrective pattern down here? And then the next point would be, how is this the next 1, 2, 3, 4, 5? I mean, that would be possible actually. That would potentially check out, which would make, so if we take a little bit creative liberty here for the first part, then this would be the next wave 1, 2, and we were just looking at this part here, which would then only be the first wave of the third wave that we have yet to come. So again, assuming a little bit creative liberty here, we would expect our third wave actually to at least reach the 2503. However, if we consider the size of this first 5-wave move, wave 2, wave 3, wave 4, wave 5, we probably would be looking at one of the other higher candidates for that third wave move. Again, that, however, all hinges on the idea that somehow this here is part of an impulsive pattern. Maybe some of you are able to label this accordingly without violating any rules. I didn't dedicate a lot of time to doing that because my overall outlook is still bullish anyway. But I just didn't find, with the limited time I spent, I didn't find any indication for that. Now we already bounced the 24 here, which is quite suspicious. There are basically 3 different candles where we bounce exactly at 24. Technically here we should now get the breakout, maybe not instantly, because as said, there is the chance that here we are currently getting the corrective pattern, but said we still have the option that this last wave isn't fully finished yet and we go up a little bit higher. If we use Kennedy channeling technique, just as a short repetition, we would have our so-called base channel formed down here. And with the breakout, we are confirming that we're in the third wave. We're in the acceleration channel. We take whatever high point we have and our point 1 with a parallel through point 2. And whenever we have a breakout to the bottom, we're confirmed in quotes in wave 4, which makes this our wave 4. And then here it's a little bit tricky because technically that would mean when we apply our deceleration trend line, that the breakout, oh, that's not a confirmed breakout, so that's still okay. So the breakout here would indicate that we're in the 5th wave. And then to get our actual target for the 5th wave, we take point 2, point 4, and a parallel through our point 3. And we would expect the 5th wave to touch at least the median, which it does here and here, or the top of this channel. So now from the looks of it, initially while I was talking, it looked like we might get a wave C push down. We can see that we have a little bit of upward movement here. So it would indicate the assumption that 1, 2, 3, 4, 5 isn't finished yet. Therefore, I would assume that we might touch this median one more time. The top is going to be challenging considering the steep angle that this channel has. But again, using Kennedy channeling technique would point towards exactly what's just happening now, that we'll get another push upwards to touch at least this. Now, if we zoom in even further, at some point it just becomes cluttered, but even this last movement here has to subdivide into 1, 2, 3, 4, 5. Now, if that was already the 5 push, or if there's still another little bit of that to come, is obviously a different question. If we look on 2 small time frames or time frames that are too small, we just don't get a lot of easily readable patterns anymore. But yeah, so hourly time frame is usually the one where you can see the clearest patterns, in my opinion. Bigger time frames work as well. Smaller time frames can be used to try to confirm things, but that's just my personal experience and opinion. So whatever works for you, do that. Gonna zoom out here again. We can see what just was big on our screen is only a little tiny area of the overall pattern. Yeah, as said, we're still waiting to break the, what did we say, 25, 24. So we're going to create an alert now. And I'm just going to call that up. So because again, once we break this, then in my opinion, the variation where we would still be in the corrective drawn out pattern or dragged out pattern and still get a push down is definitely dead in the water. Yeah, which then brings, there are like then further considerations which are also challenging. I mean, visually we can clearly see 1, 2, 3, 4, 5, but this could also technically subdivide into some kind of A, B, C. So the big question is, and especially here, what do we have here is low 70, 70, and here we have 70, 56. Yeah, so here we go lower than here. So this cannot be an impulsive wave because then the corrective wave goes to low, which means this has to subdivide into a free wave impulse or a combination of corrective impulses, not impulses, but corrective waves. The big question, however, is did we, what's visually the most likely scenario is we actually finished 5 waves up here, not just 3, which, however, makes a huge difference in our assumption, because if we finished 5 waves up here, then, and here, potentially should have a corrective pattern that could finish here, then again, we would need to be able to somehow label all of this as an impulsive pattern or part of an impulsive pattern, which, again, especially this first part here, yeah, I don't know how to do that without like some creative liberty or like, you know, like not violating any of the rules, but there's just no clear pattern in here because of that strong initial move followed by lower moves. Yeah, at least for me, if you can find a pattern there, good for you. Yeah, so much about GameStop. So long story short, well, we still need to break 25, 24 to have some kind of additional confirmation. From the looks of it, we just finished or are finishing a 5-wave upwards impulse, followed by a short correction, followed by another 5-wave impulse, short correction, and at least another 5-wave impulse, which means I have little doubt that that's actually going to happen. But until it happens, theoretically, it could still go the other way. So there's that. Now, which brings us that now that I talked so long about it, markets are obviously open. We can see now if I would want to close out the $30 calls for this week, I actually would have to sacrifice $75. However, on the other hand, I would be able to already write options for next week for $66 a piece right now. So that would be $300 and a few dollars in premium. So I would actually be able to pocket around $225 or a little bit more than $225 in premium for next week. Now, as we go higher, or if we go higher, so we're actually going to circle back because this is our biggest exposure. So if we go higher to finish this 5th wave, which again, let's bring the short scale assumption up here, so or the smallest pattern assumption, which could be like this or like this. That's going to be a tricky part as well, but I'm going to settle for this one here. So we reached the minimum target for whatever could be this 5th wave. We haven't reached the maximum target, again, which is not always the maximum, but it's like very often we fall short of the 100% target. Yeah, so if today we actually, even if that was already now the finishing here, then we would get our retracement into this area. Again, 50% would still be the overlapping part with the wave 4. So after that, however, we still should go up further, which brings us to the point that while possible that today we already shoot through 25, 24, I think it's not going to be the case, assuming there are no like super dramatic and drastic moves. It would be, so if we assume like some more, I don't know, like casual development, yeah, then the scenario would be more likely again that we might still see a little higher. Then we get our correction down into 38.2, 61.8, anywhere in between, likely in the area here, so 22 point something. And then we start to develop the next 5 waves up, which means by Friday, we should actually be higher than we are right now. At least that would be my assumption based on the small scale labeling. And if we are higher than we are right now by Friday, then it also means that on Friday, my $30 calls should be cheaper. So as long as we're still at least a couple dollars away from 30, but which makes it less likely for 30 to happen, which means I should be able to close them out for a better price, while still the premiums for next Friday should be higher, which means I will not roll the option today. So we're not going to sacrifice the now $62 or $60. But we're going to hold the option till the end of the week to realize the meager, whatever, $29 premium for the week. And then hopefully we still can, maybe for at least the same price, so around $60 per option, or maybe even more. So maybe we get to realize a couple $100 for next week's in premium, which would be quite sweet. That about GameStop. So went a little bit overboard there. Now we'll make our way through the rest of the list. So Barnes & Noble Educational has a slightly red day. Yeah, like we covered in previous episodes, so we'll have to also zoom out here. Maybe we will not be able to cover all the positions today. So let's actually take it from the top. So we basically had huge downwards movements or long-term downward movements for quite some time. And now there's something from the past on the chart before the split. And let's actually get rid of most of it. Yeah, so we have huge downwards movement and we have some kind of bottom now there. And if we zoom in, we see that, okay, there we have a huge upwards movement. And the further we zoom in, we can probably go on a daily chart. We can see that this looks like it might be 1, 2, 3, 4, 5 of some kind. Yeah, likely like this, which means then we would have a 5-wave impulse that we're currently retracing. And we actually retraced it further than our usual suspect. Now, the challenging part here is that visually, this does not look like a clean three-way move like A, B, C, because wave C obviously has then this other push here. But on top of that, which would be possible, so it could be 5 waves, 3 waves, and then 1, 2, 3, 4, 5. So it could be ABC, but in terms of wave movement and relationships, it doesn't look that nice. Yeah? Which brings the option that we could still go further down from wherever we are. However, if we then, yeah, what do we focus on first? We anyway have to zoom in closer. First, we focus on actually this part here, I guess. So we just make our way a little closer. 8 hours. Up. So we hit a bottom down here, and we're gonna use Kennedy channeling technique for starters, and then we're gonna apply our usual retracement extensions. So here we have 605, and here we have also 605. So it's possible that the wave starts here. It's also possible that basically the wave is like this. So that's basically then wave 1 and wave 2. Visually, this here is a 3-wave move. So I would go with that assumption, which means the moment we break out from here, we have our 3rd wave going. Now, we're actually going to mix things up here. So we would have then our expansion, and we would expect that our 3rd wave tops out at one of the usual suspects. So, which it in this case, surprisingly, does not perfectly. Now, if we adjust this here, maybe we really got the wrong starting point, then the world works better, yeah. So, okay, based on that, we probably are looking at this. So, possible that this is still a move. Yep, that checks out better. But then we would have to have finished here already. Oh, no, we have that. We had that before as well, yeah. So apparently this is still part of the downward movement because, again, when we apply an expansion on a wave 1, we usually expect our 3rd wave to finish on one of those levels. And we can see that here we finish on the 338.2 extension level. Hi, Akashi, great to have you here. Hope you're having a great day, and some laughs at my mishaps in Red Dead Redemption. So we have likely wave 1, wave 2. So we have to pick our point 2. And then parallel starting point 2, parallel through point 1. The moment we have the breakout here, we are in wave 3. So we move on and add our acceleration channel, which means we pick the high point that we have, we pick point 1, we pick point 2, and we make a parallel to it, which brings us a little bit mixed results here because that would expect that we're here already in wave 4. Okay, so Kennedy channeling technique is letting us a little bit down if we go this route. Because it would assume that we're here in wave 4 where we are, well, we're not bouncing from that level here. Now, if we circle back for a second, so it's obviously slightly embarrassing when strategies used don't work out, but one has to consider we're never talking about certainties, we're talking about probabilities, and we're talking about tools that work regularly or relatively well in most of the cases. So if we pick the high points here and the parallel through point 2, then we don't get the breakout. So this great day, we'll talk to you about it on the gaming stream. That's great. So while here in this case, we have basically the expansion that would support, not expansion, extension that would support the idea that this is wave 1, 2, 3. Because if we apply it here, we can clearly see that we don't exactly reach that area. So we don't bounce specifically from one of our usual lines. Whereas Kennedy channeling technique would support that here we have our breakout for wave 3, and then here we don't have the breakout to the bottom, but once we reach this top here, and again we adjust for 0.2, we have the breakout to the bottom. So which would point towards this being wave 4, deceleration trend line for wave 4, which would go like this, and the moment we break out here, we're in quotes in wave 5. And if we take our wave 4, our wave 2, or what we assume is wave 2, with a parallel through our 0.3 up, then we would expect the 5th wave to reach at least the median, which it instantly does, or the top, which means Kennedy channeling technique like this makes the most sense. Let's see what auto labeling would do if I just let it paint. Yeah, so auto labeling says also this is the most accurate labeling here. Yeah, we can with the naked eye see, okay, we have a 3-wave move, A, B, C. Now I'm gonna actually undo that and have it again auto labeled in quotes. Yeah, but this part here we forecasted, although we also got it partially wrong here. We can also double check the whole thing by adding a retracement. So I know it gets a little bit clouded or cluttered on the chart. We don't need this one anymore. We can get rid of it. We can also get rid of the Kennedy channeling technique channels. And we retrace almost exactly we trace exactly 61.8%, which is one of the common levels of turnaround for corrective patterns. Yeah. Additionally, we also did the following. I mean, initially we did it slightly wrong because initially we thought that maybe this would be our correction, and we see that we exceed our 100 a little bit, just to basically have to then admit that that was slightly wrong, and this here is our accurate price target. Yeah. So we considered, again, like I mentioned with GameStop, where I just talked about retracing into the area of wave 4 of the previous impulse wave of the lower degree. This is exactly what you can see here as well in Barnes & Noble Education. We have 1, 2, 3. So the previous impulse wave is this wave up here, and the lower degree is when we subdivide it into 1, 2, 3, 4, 5. So we can see that our wave 4 is down here with a low at $8. We also know that very commonly we finish our corrections at 38.2 or 61.8, sometimes 50%, and sometimes either 21.4 or 78.6%. And in this case, we have basically here our wave 4 area of the previous impulse wave of a lower degree. On top of that, the 61.8% retracement is in the same area, and the 100% expansion of wave A, B, C is in that area, which pointed towards, okay, entering in that area. Personally, I entered here at 8:45 and then immediately the next day again here as well. Yeah. So that checks out based on Elliott Wave Theory, even though one has to admit, the one thing from our usual tools that it didn't follow is bouncing wave 3, bouncing at one of our usual suspect levels, which it didn't do in this case. Yeah. Happens, but again, we're talking probabilities, not certainties. Now, if we zoom a little bit further, yeah, then it's getting tricky because we had such strong movements that the moving averages here are like not really very reliable. Yeah, so what can we do next? We can first of all zoom out. So because that brings us to the situation, as I said, we are relatively certain that we have a 5-wave impulse up here. Yeah. Now the question is, did we actually finish the correction down here? I hope we did. Otherwise, eventually we will just go crashing down. Yeah. Now, however, if this is 5 waves and a finished correction, we would now be in the next 5 waves up. So if we assume that the stock is still going to the basement, then we would expect this to be a huge corrective pattern, which means A, B, and then wave C. Yeah. Or B not even finished yet. Yeah, it doesn't matter. So one option would be this is a huge corrective pattern before we go further down. This would be wave A. Wave B could be finished here. Wave B could be unfinished, and then we get a wave C. Yeah. So, and then after wave C, we go further down. Yeah? If wave B is finished here, then we would right now be in 5 waves up. If wave B is not finished here, then we would expect that this is actually wave A, wave B not finished, and then we get a wave C. So because wave B of a zigzag subdivides into another 3-wave corrective pattern, yeah, which means, and this wave B would also need to subdivide into A, B, C. So when we undo a little bit of this, which means our worst case prediction or forecast would be to say, okay, this is part of a corrective pattern where we now are going to get still a wave C, which shows us still, I don't know, like we can throw an expansion there to get the price targets. So if we take wave starting point, wave A, and then wave B, we can see our price targets, our low store. So that's now right for you. Our low price targets here are 14.19 to 19.76. That would be the assumption that we are currently developing an ABC pattern that is going to be part of this bigger potential ABC pattern. That would be the low ball offer. Yeah? The second offer would be, or the second option would be, as said, that we finished our 5 waves and we finished wave B, which means we would now potentially be in wave C already. And if we are in wave C already, then this would only be, we can get rid of this then. Nope. Then this would only be the first wave. For wave 1, 2, 3, you can see the price targets here, 4, and then wave 5. And wave C should then make a new high. I mean, it's then hard to believe that we're looking at a big corrective pattern, to be honest, but it's still possible. Yeah. So we see that the lowest forecast would actually point towards, what did we say, like roughly $14 to $19. The next best forecast already, I mean, the first targets for the third wave would be here, 20 to 24, but the most common area for a third wave that I've noticed is the 261.8 retracement extension. I don't know why, but it is just like this in my experience. Yeah. Maybe it's just, I don't know, luck of the draw in quotes that many of the stocks that I looked at so far just happen to have it like this. But if we would look at every single stock, it would not be that common, or there would be an even distribution. It's just my personal opinion that it's like mostly like this. Yeah. Now, which means, again, so our short-term prediction, or not short-term, we're going to look at short-term in a second, and we also covered that yesterday already. But our like low ball prediction would be $14 to $19 for finishing ABC, which is a little bit of upside, 40 to almost 100% upside. Our next best prediction would already point towards a couple 100% upside over the next couple of months, yeah, developing. So for 1, 2, 3, 4, 5, and that's only the wave 3 target. Then we get a wave 4, and then we get a wave 5 that should take us higher. Yeah? And so with that, we covered if this is ABC, if this is correction finished, 1, 2, 3. And yeah, those are our 2 options. So which means, like, based on this, I don't see, unless the whole thing develops in a way that all patterns become invalid, because obviously Elliott Wave Theory, or the Elliott Wave principle, relies on MISC psychology, which means it applies better in stocks, and or actually it applies best in indices. So where you have the trading decisions of millions of people affecting the movement versus stocks with low liquidity and or low volume, and therefore like fewer numbers of people actively trading it, don't always follow the pattern. So there can be that we see a pattern and then it just gets completely invalidated. Yeah? But from the looks of the pattern, based on my analysis, we have like huge upside over the next couple of weeks and months here to come. Now, short term, so we determine our corrective pattern and our turnaround point. And short term, we can also with the naked eye see 1, 2, 3, 4, 5. Yeah, not happy with the 5th wave here, to be honest, but it looks like we actually have it like this. Yeah, which brings us again. So like here, it becomes a little bit harder. You can also see that even though we're looking at an hourly chart, because there's not that much trading activity going on, the data that we have is not as clear. Yeah. Okay, Kennedy channeling techniques, no help here because we don't get a clean breakout from here. So we'll have to rely on other tools. Extension. Also not too nice. Could that be let's try to see. So we retrace 61.8% here and also here. So rule of alternation doesn't apply in that small pattern. Okay. So short term, it's a pain in the ass. Yeah. So zoom out a little bit. Let's see if it makes a little bit more sense. That's how it checks out. Yeah. So on the 4-hour chart, hourly chart doesn't give a clear picture. 4-hour chart gives a clearer picture, where we basically, if this is our wave 1, 2, we bounce at the 261.8 extension level. Again, the usual candidate for a bigger correction, which would be our wave 4. Again, Kennedy channeling technique is not going to check out because we are going to get a very, it might still check out if we work here. Yeah, so that would be our wave 1, 2. Yeah, barely. So we barely get a breakout from the base channel. And then if we assume this top here and our point 1 would be this with a parallel through point 2, then we have our breakout to the bottom for, in quotes, wave 4. Then we have our deceleration trend line for wave 4, where we then have the breakout for wave 5. And then as for the target areas for the 5th wave, we will take point 4, point 2, and our point 3. And again, we would expect to reach the median or touch the top. We don't fully reach the top, but we get there. So like Kennedy channeling technique, not perfect here on that small scale, but it still would support the idea that we indeed have 5 waves in here. Yeah. So yeah, like I would label them slightly different than the auto labeling does. So I said, I personally would think that we are looking at this 4 or 5 waves here, which means we are right now correcting this movement here, which means again we would expect to touch 38.2 or 61.8. Considering the previous area of wave 4, we are already close to that. So it's possible that this is the entire corrective pattern. It's possible that this is just part of it. We get another move up and then we get a move down to reach the 61.8, for example. However, it does not change the assumption or the look of the whole thing that would point towards, okay, we had our bottom here and we are right now developing the next 5 waves up, where this is wave 1. We're currently either at the end of wave 2 or still in wave 2. And after that, we should get a strong upwards movement. So long story short, as I mentioned earlier, bullish in Barnes & Noble Education. Our entries, well, I had like an early entry somewhere here-ish, so either back here or back here, I don't remember fully, probably back here. So based on the first wrong assumption on my end, we actually then increased our position perfectly at 845 here, and then manually a little bit here as well on the next day. And from the looks of it, we're getting something that will look like, again, 1, 2, 2, as said, could still be unfinished, which doesn't mean it cannot go up right here. Then we get, so A, B, C possible. And then we should get our 3rd wave move further up. So there should be more upside here still possible, especially long term. Yeah. So yeah, not sure if we will be able to manage or cover all stocks today. As I said, I'm trying to do everything a little bit more detailed to make sure that my assistant is able to update our forecasting prediction sheet with like accurate information. Yeah, we can still move on. So we look for grab. I mean, grab is something I don't even know when I bought the call option, but we have a call option that expires in January 26 based on this here. So we have a finished downward movement, or what I assume is a finished downward movement. And in my opinion, which could be wrong, but my opinion is that if we bottomed here, then this on the monthly chart not visible, but if we look on the weekly chart and we zoom a little bit, this here would or could be the beginning of 1, 2, although I mean auto labeling does it relatively weird. We're actually going to get rid of the auto waves here. Yeah. So I believe that we're looking at 1, 2. 2 might be a drawn out corrective pattern that for all I care could also finish here officially, yeah. But that we are now or have yet to see wave 3, wave 4, and then wave 5, which hopefully till 26 starts to play out. Now we already are higher, so we already hit that. The worst case assumption would be something like our usual worst case assumption would be that this is just part of a corrective pattern before we go further down, in which case, for example, we could already have reached our climax here and would now then watch the company go bust. We could go a little higher and then watch the company go bust. Thankfully, the position in grab cost an astonishing $50. So even if I'm wrong here, I'm not going to cry over it. However, if I'm right here, then we should go substantially up. And even my, $5 call should then be worth substantially more than the $50 that I paid for it in 2026. So profit targets for grab would be in that case, like the long-term target, unless this turns into just a correction. So ABC, the long-term target would be 942 to 1088. Yeah. However, well, I'm gonna stick with that. I think that we hit the bottom here, and this is actually 1, 2, or 2 finished here, and that's also some subwave 1, 2, 1, 2, blah blah blah. But yeah, so that will be my prediction here: 942, 1088. Moving on, immersion. Yeah, like there, I'm not sure if we will jump through all the hoops today. Yeah, we were still waiting to break the. No, we were actually yesterday already noticed that we broke the 898. Yeah, that was the case. Yeah. So, which kind of like provides us with additional evidence that we are finally done with the corrective pattern here. No guarantees yet, but still, we turned around roughly around the 61.8 retracement and the 100% expansion level for ABC. Full transparency, I got this one wrong originally and actually thought that we might have ABC already here because we touched the top of the base channel. Now we're going to zoom out here as well. Actually, let's take a yearly chart. Yep. And maybe we do the whole thing real quick again. Yeah, let's do it again. So from the looks of this, while I could be wrong, it's possible that we're currently in a downward move. This could be 5 waves down, followed by ABC. Yeah, okay, C would not be over there, but C would be somewhere here before we go further down, which also would mean we actually first have to go further up. Yeah. I, however, do believe that we're looking at a very, very big wave 1, wave 2, and we're currently in wave 3 and obviously 4, 5. Yeah, I don't know what it's doing there, like what's going wrong here with the thing. So I removed this for now. Yeah. So my opinion is that we have wave 1, wave 2, which means we would have a subwave here. That also, we're going to need a monthly chart now to get a little bit more candles. Maybe that's too many. So visually with the naked eye, we can see where I just said this is a big wave 1, 2. We can with the naked eye see 1, 2, 3, 4, 5. We can try our usual suspects. I don't remember what the values there were, if I even checked it in previous streams. So high point would be here, and we can see like we don't fully follow the rules in terms of bouncing at one of the, no, here we actually do, yeah, which could be 1, 2, 3, 4, 5, but then that would only be wave 1. One second, so we'll have to consider that scenario. So, but one, two. Yeah, I think that here our extension, again, that's like a creative decision here. So we don't bounce at the usual suspect that we would expect. We do it here at a 661.8 extension level. But after that, the correction is way too long for the correction still to be part of this pattern. So I assume that what we have here is our wave 1 as I shared on the yearly chart. So from here to here. After that, we retrace to 61.8%, a little bit lower, yes, but basically we bounce at 61.8. which means that we finished, and visually, while visually not perfect, it's likely ABC like this, which means that either what's following afterwards here, and we actually still are going to add the horizontal line here to mark the high that we had back there, yeah. So now come on, and then move that a little bit smaller or wider, yeah. Can I? God, if I, no, then it doesn't work, yeah, because, yeah, okay, so undo, yeah. So which means that this here is, or could supposedly be the beginning of the next 1, 2, 3, 4, 5, for example, considering how it develops. So we assume that this is our next 5-wave impulse, where we again retrace around 61.8%. 2 down here, or technically it could be that our correction finishes here, yeah. So still, so that this is a bigger A, B, C, where in this case wave C just doesn't make a new low, or does it? Like low 423, low 420, actually same low. So it's possible that what we have here is the dip. I'm just gonna label the corrective wave like this, yeah. And then the impulsive wave that we had here, let's see if the auto labeling gets it right, would actually need to be a diagonal, yeah, so that it is like this, 1, 2, 3, 4, 5. So that's possible, which means again we would have 1, 2. Yeah, that I cannot fully label that. I can label the subwave. So, up. Yeah, not like this, but basically, again, I assume it's something like this. And now it's stacked up. We need to manually Elliott wave impulse. And then we just drag those things to where we think they belong. And again, it used the diagonal. Okay, we have to manually do that 1 second. Tools, Elliott wave, impulse. Okay, so we assume, zoom in a bit, that this is our 1, 2, 3, 4, and 5. Yeah. So again, hard to label this correction here fully, but I believe that it is like potentially like this. Yeah. Again, so we have 5 waves up. We finish here around the 61.8 retracement. Yes, we briefly get lower. And then we have another, let's reset the zoom, just making sure it's fine, yeah. Then we have another 5 waves up. We finish again at the 61.8% retracement, although it's a bigger corrective pattern, yeah. This idea would be supported because here visually we also have 3 waves, yeah. So 1, 2, 3. So that supports the idea that we have 5 waves, 3 waves, 5 waves for a bigger correction, which means we would now be, surprise, surprise, in the next 5 waves up. That could already be finished. So it could be 1, 2, 3, 4, 5 here, yeah. So if we let the auto labeling do its magic here, it probably will almost. So I would assume that it's like this, yeah. So that we have another. Yeah, and we have to pick diagonal here for it to work. The tools, Elliott wave. Yeah, I'm gonna go with leading diagonal. There's a difference in how they subdivide. Yeah, so and if it's a first wave, it would subdivide into, it would be a leading diagonal and subdivide differently than if it's a 5th wave, it would subdivide into an ending diagonal and subdivide differently. Yeah? So which means we would right now expect to see another corrective pattern, which again 38.2. 50%, 61.8. At 61.8, we also would have the wave 4 territory. So it's possible that we go a little bit lower here. So what's that? The 20% drop to 669 roughly before we go up further. So my overall assumption would therefore be that if we're looking at this, that we have a big wave 1, 2, and we're currently in the 3rd wave. And within that 3rd wave, also that degree here is wrong. Let's change that. That's primary degree, but just degree, so that we have the same colors, primary. So we have a big wave 1, 2, and then we are in the 3rd wave, and in that 3rd wave we have wave 1 and 2. So which means on a big scale, I believe that the most likely labeling here would be that we are in the 3rd wave. So actually here we also have wave 1, 2. So we have here 1, 2. So we're in this 3rd wave, which is the 3rd wave of this 1, 2. And which is the 3rd wave of this big 1, 2s, which means we are in the 3rd wave of a 3rd wave of a 3rd wave. Now, while we might here technically still be in the 2nd wave, that corrects a little bit down, but within the next couple, okay, now we're on a monthly chart, of course, we zoom in a little bit more. Within the next couple of weeks or January, July, that's already 25. Yeah. So yeah, in the not too far future, so not within the next couple of days, but in the not too far future, depending on if this correction is finished, it could be, as we can see, ABC. So it could visually already be ABC and finished. Yeah, it could be that this is only part. We go a little bit up, we get our push down. So while there's still a little bit downside to come, I believe that long-term immersion will actually take off further here. Yeah, and yeah, fix the waypoints. Yeah. So actually makes sense as a diagonal, because then that's a free wave move here. So diagonal really checks out here, really is what kind of like seems to make sense. And then again, correction maybe not finished yet, but long-term outlook super, super bullish. Now, as for price forecast, obviously that's a different question. So even on the smallest scale, so even on only this smaller part here, if we use and if we are right, that's obviously always the assumption. If we, no, not retracement, extension, because if this is the next wave 1, 2, then our price targets would actually be in that area here. So that would be, and if we consider the bigger thing, it would be even higher, but there we are then talking, I mean, you can see that this is 20 years back. So it's like almost 10 years for wave 1, a couple of years for wave 2, and so on. So we would talk about the next, I don't know, decades, so not worth mentioning. Here we are right now looking at May 20, so we're looking at 2 years here. So we would also consider that a multi-year target, basically 74.07 to 98.36. Yeah. The only other option here would be the same one that we talked about before, which would be that this is somehow an A, B, C move, followed by more movements down. But I think that is less likely. So I'm going to say for immersion, I think the long-term targets, and again, that's a multi-year target. We're not talking about like short-term here or very short-term, would be 74.07 to 98.36. Yeah. Now let's see if we maybe can get something shorter term. Yeah, like visually 1, 2, 3, 4, 5. So we would expect a little bit upside for wave B and then still the push down. So short term, I think we're going down, like a little bit. And by short term, we mean by the end of the year, or actually into the new year as well a little bit. Our exposure to immersion is not that big. We're talking about $500 exposure. So even if we drop 20% there, we're just going to hold on to that. I think long term, this one will pay out nicely. So yeah, no need to realize a small loss when I think it will recover nicely. We're gonna circle back here to maybe not the weekly chart, but or stay on the weekly chart for now because of the bigger pattern, so that we don't lose the relationship here. Yeah. Again, so shared that. Moving on to Intel. Intel is slightly down today. And we're also gonna zoom out. Where's this? Oh, I don't have that retracement on the chart anymore. That's where do you come from? Okay, dokey, yeah. So okay, maybe we dive tomorrow into Intel. So because I'm running out of time for today, let's see short-term-ish. So first glance, 1, 2, 3, 4, 5, A, B, C. C fulfills most of the requirements, didn't reach the full 100% target that we usually expect, but it still retraced decently, which means we could potentially be looking at the next wave 1, 2, 1, 2, and then wave 3 up. Although if we look closer, it's possible that for the, yeah, even here, 1, 2, 3, 4, truncated fifth wave, so not making a new high. ABC, although here we go lower, so no. 1, 2, 1, 2, 3, 4, 5, which means we would technically be retracing this, where we retraced now 50%. Okay, let's zoom out a little bit more. Yeah, so short term, possible that we go a little bit down here, in my opinion. Yeah. Long term, however, so that we're still correcting here, either from this or from this. ABC. Although it's also possible, and maybe even the more likely scenario, that we actually finish the correction here, and which means we would now start our third wave up, because that would be 1, 2. So we would be in the third wave, and then within that third wave, we finish then wave 1 and 2, and would be in the third wave. So this would be a third wave of a third wave, which should be which should give us strong movements in the days and weeks to come. Yeah, like, that's as far as I go for today. We'll actually tomorrow continue with diving into Intel from the beginning, which might mean I might update whatever, so my prediction based on the bigger picture. But for today, we move on from here and just keep things simple so I can finish things up. Cost unchanged from yesterday. Again, we will also dive into that in tomorrow's stream or one of the next streams to label it from the beginning and have a clear prediction. And yeah, so what we're still waiting for here is basically the breaking of the 879 high. Unchanged. So Neo has a red day, surprisingly, I mean, which brings, so we finished potentially 5 waves up here, are currently retracing. There is the option that our overall correction down here is finished. As you can see, surprise, surprise, area of wave 4 and 61.8 retracement. However, visually, that's not a very nice 3-wave move. It's not clearly or distinctly divided. However, if we finished 3 waves down here with the correction, and this would be the next wave 1 up. We currently also, again, retraced here roughly 61.8%. So one could consider going long here. Stop loss would need to be at the low here at 496, because that's like less than 10% risk. But if we're indeed done with the correction, then this would develop into 1, 2, 3, 4, 5 to make actually a new high, which means 10% risk, 100% upside. So not the worst risk-reward ratio that one could jump into. Now, that's just a rough estimate based on the 8-hour time frame. Again, during the next couple of streams, in the next couple of weeks, we are going to relabel most of that or work our way from top to bottom again. So it's possible that on the bigger picture, there's actually something that would negate that assumption. But on the small picture, that would be the prediction I would go with. As said, so while it doesn't look like a finished correction in terms of easily subdividable into 3 waves, it fits the usual criteria. So area of wave 4 of the previous impulse wave plus the 61.8 retracement, which both would point towards correction being done here, and we're going up from here. Novavax is now still moving sideways. We're still waiting a little bit to see if we get another push down to 61.8% or not. Overall long-term outlook bullish. We're also going to cover more on the overall big scale labeling in one of the future live streams. But if you want to have a little bit more detail, you can check out pretty much every one of the recent episodes, because usually, especially after every episode between the, let's say, 17th of October and today should have more information on how this developed, where was right, where was wrong. NVIDIA reached the 100% target for an ABC correction, which is what we talked about yesterday. And with that, actually finished a potentially nice ABC pattern. And although we only retraced 21.4%, again, this is one of the other levels. It's not the most common one, but it's one of the possible ones, which means there is a decent chance that this is the end of the correction, followed by further upward movement. There's still also the option that it's only the beginning of the correction. So this would then turn into 1, 2, 3, 4, 5, ABC, and then we get another push down. So long entries right now would actually need to have the stop loss at least here at the 114.70 low, or ideally here at the 195 low. However, again, visually this would check out as a potentially finished retracement. If we would have set our orders based on yesterday, we would have made our entry at 137.67 and would right now be in profit and could set our stop loss accordingly to not lose anymore, even if the correction isn't over. But yeah, we didn't enter because my funds are tied up. So but if you entered, so I would consider the correction likely to be over. Although again, it didn't follow all the rules, or actually, if we only were correcting this part here, it would follow most of the rules, because then we would have retraced into the area of wave 4 of the previous impulse wave of a lower degree. We almost touched the 50% retracement level, not the 61.8 in that case. And we finished around the 100% expansion level for wave ABC. So if we, from the looks of it, it looks like we only corrected this wave here, which means there is still or should still be another push up to come. What's that? 10% would be $14, so 12% upside, roughly guesstimated. Again, we'll dive into that also during one of the next streams. And moving on, SPY is slightly green today. Yeah, there we are not 100% sure. It's possible that the correction finished here, but then it doesn't follow any of the usual other suspects. Visually, on naked with the naked eye, I would say this is 1, 2, 3, 4, and we still get wave 5. Then that would check out. Although we don't retrace into the area of wave 4, we retraced a little further. But then visually, do we get? Let's remove this one from now here. So visually, that would mean that we are only retraced basically this here, in which case we got close to the 61.8 retracement level. And as for the corrective wave, we would then assume that actually this is our corrective wave, something like this. And we actually reached the maximum target exactly for wave ABC. Again, that's very rough here. It's like not super confirmed or so, but from the visual aspects, this looks like 1, 2, 3, 4, and now we get wave 5, which means wave 5 should take us, as you can see, to 587.18 or 595.22. So Ray, if you're still listening, forecast for SPY would be 587.18, 595.22. That would be the range that we would expect for this move. And then we would have finished 1, 2, 3, 4, 5, and we would correct this move next. Again, that's very rough. So I would not be surprised if, when we during the next days find the time to relabel SPY from, in quotes, the beginning, because there's obviously more history, that we make an adjustment. But right now, based on this, I would say long entry, stop loss here at the low at 474.41. That one we don't need anymore, and take profits. So once we cross 587.18, basically just move the stop loss into profit, and consider getting out at 595.22, or once we get close to that, so around 592, 593, in that range. Yeah. That about SPY, and then we'll finish with the NASDAQ real quick, where we reached the minimum target here for wave ABC, and that we can see we already made a new high here, which means that it's a little bit tricky because we don't have futures here with overnight data, which means we're missing candles. And if we're missing candles, it's tricky to know where wave 2 was or is. But overall, just like we predicted already in previous weeks, based on the bigger pattern, we still expect SPY NASDAQ to reach the 20,700 mark. I covered the exact targets in a previous episode with a little bit more detail. We're gonna dive into that also in the future, and I think I'm gonna just call it a day now for here. I hope you were able to take some things away from today's stream. Don't forget, as always, like, subscribe, enable notifications. We looked into some stocks and some assets into more detail. I'm going to use the next couple of streams to dive into other or more stocks with more detail and provide a more detailed forecast and predictions. As I shared, circling back for a second, I finally have my sheet set up to keep track of different predictions. Again, the values shown right now in quotes random. Still working on getting my, in quotes, personal assistant to understand what I'm saying in those streams, because she obviously, or not obviously, but she doesn't have that much clue about trading charts and whatnot. But we'll give it a try to see if she can keep the prediction list updated based on what I'm sharing in the stream, and then we will basically be able also to more accurately point out where I'm right, where I'm wrong, and so it should also make it easier for me when we look into a chart that already has a lot of stuff on it to instantly know, okay, my overall prediction is bullish or bearish, to faster understand what's on the chart. Now, but that's pretty much it. So I have other things on my schedule now for the rest of the day. Thank you very much for tuning in. Again, like, subscribe, enable notifications. The least you can do if you took something away from it, hit the thumbs up button. Really makes a difference in engagement rankment of the stream, which means more people tune in, which means we get more interactions, maybe more people that here and there disagree with my opinions. So we get overall better results. Yeah. Anyway, so have a great day. See you all then tomorrow around 5 minutes before market open for another episode of Daily Market Mastery. And till then, bye-bye.